Welcome, active traders, to this week's broadcast episode of Trading Week Ahead. We are now on air with so many of you from around the world. It's great to see another epic turnout. Number one in the industry, to the best of my knowledge. We've got over 5,200 people who've registered for these events for the last 6 years. I've been here for you guys, absolutely free every Saturday morning, or almost every Saturday morning. Markets have been in rally mode lately, so let's take a look at how to potentially capitalize on the price action we've been seeing lately and get underway. As always, all information is for educational use only. Not making advice about what to buy, sell, or hold. And by watching this, you agree not to make actual trades. Learn in a demo account. Practice this stuff in a safe, intelligent learning environment. Or do what you want. So, if your trading losses ever make you or your family say, "What the heck? Stop the madness. There's got to be a better way." We want to take a look at some of the best patterns in our current markets. Your goal is to make as much money as you can, right? My goal is to help you get you there potentially sooner rather than later. So hopefully you can dodge a bullet and sidestep all the hidden hazards and mistakes that I've made in my own trading career, trading millions of dollars worth of stocks, ETFs, and other instruments, and figure this stuff out. First, a shout out to our traders of the week. I wanted to acknowledge the contributions, my trading heroes of the week for swing scans. Bill W. Thanks, Bill, for your contribution last week, and thanks to John for your contribution in our Trading Open Live Room member. If either of you would like $100 off of an annual membership, hit me up with the support ticket and I'll give you a link to take care of that. So thanks to each of you for contributing. You know, it's not all just about me, it's about the teamwork and the community, and so I really value the ongoing participation of all of you. Our quote of the week. I used to work for the Ford Motor Company. Best company I've ever worked for in my life. And his quote is, "My best friend is one that brings out the best in me." And I hope that as your friend in trading, I can bring out the best, potentially most successful trading entry and exit, scanning, trade management, intelligent decision-making focus that you want to go for as a trade to really make a difference in turning things around. My goal is to help you break through plateaus, to go from where you're currently at to where you want to be, and get there sooner rather than later. So, you know, one of my favorite sayings is, adversity demands action. And, you know, you folks are amazing for your support, so I appreciate you taking action and be here this Saturday. I hope that I can bring out the best in your own trades. Before we hit our charts, coaching tip of the week, avoid false breakouts, part 3. One of the things I think can help you is to focus more on consistent trending charts rather than pop and drop, high velocity, dangerous charts, right? One of the things that I found makes a significant difference, at least in my own trading success, has been trading charts that have a consistent, pre-existing, volatile enough to trade uptrend that I get in on a continuation, or my acceleration ramp pattern, where you get a steady uptrend that hockey sticks in a sharp angle breakout. You may have seen me speak at the Traders Expos, in Stocks and Commodities magazine, my live Vegas seminars, or trading as much as $5 million, or $4.9 million to be exact, in a single year. Let's go ahead and take a look at our S&P. Last week's resistance area. Last week I said to go long. My R1 resistance trigger point for you guys last week was 27.52, and that activated on Wednesday. So congratulations to all of you who took my long call in the market at 27.52. This upcoming week, my professional trading resistance area is 27.88. R1 is 27.88. So we have a little false breakout filter right above that, because what if it goes up a couple of points and then collapses? So we don't want to be aggressive just yet. 27.88 would be a good continuity play for an R1 trigger for the S&P. Our S1 is 27.34. And the reason for that is a loss of this congestion support line. Market's finally climbing up out of the muck and pulling its head over resistance, so that's good. But if it goes back down, watch out below. You know, next stop could be way down here at the 2600 mark at this bullish lower shadow. So we did break above all 3 moving averages, and we're currently up here north of the previous resistance, right near 27.50. So if we go down to 27.34, that may make for a reversal play. So let's take a look at some outstanding charts. One of the first is a pick that my Swing Scans members got last week, and also a favorite for a live trading room at Trading the Open, Momo. And it's got lots of Momo, lots of momentum, and you can see the volatility in this guy. What I like about it is the gap continuation. It did a small gap, and it continued to get buyers day after day after day after frickin' day, all the way up from 43 to 53, right? So we got a near 10-point run in this puppy. What I like is the large green candles. If we kind of zoom in, I can't reach my magnifying glass, but if we could zoom in digitally on the 15-day chart, you can see it's got a nice steady uptrend continuation. So this is a 15-day, 15-minute candlestick chart, and you can see a nice gapped up, continued up, pulled back to support, continued up, a little gap up again. One of my favorite techniques for professional trading is to buy into multiple gap continuations for swing and day trade. So you may have seen my multi-gap article in Technical Analysis of Stocks and Commodities magazine. Whenever you see a sequence of day after day price action that's characterized by multiple gaps, you can often expect it'll keep running up. So we had a large gap here, then a small gap here, and the buyers continue to come on into town. So Momo's got some heat. We'll see if it continues the madness on up to next highs next week. Again, this was a pick that my Swing Scans members got last week. One that my small cap scans members get is JILL. For those of you who trade cheap stocks, here's one. Let's zoom in for just a bit on it. Jack and Jill went down the hill to fetch a pail of water. But this stock went from 620, gapped up to 7.5, ran all the way up to 9, right? What a skyrocket. And look at the leverage in this guy. The base of around 6, the high of around 9. So a 3-point trading range on an under $10 stock with a consistent trend versus a pop and drop like a lot of these cheap stocks have, which you don't want to trade because that just gets you in trouble. You trade thousands of shares because it's running, and then, holy crap, it starts to go against me. And you don't want that. So what you want, and what I do for my Swing Scans members is, small cap scans members for the cheap stocks, and Swing Scans for the higher price stocks, is charts that have consistent patterns. This is one of my favorites, where you've got a steady uptrend, and then it gaps above these two major moving average lines, a large green candle to get the party started, and the momentum continues to skyrocket on up to new highs. So if you do trade cheap charts, find ones that are consistent, like Jill. So that's another pick for the week ahead. An intraday pick is DHI. Is a day trader, founder of the original Day Trading University back in the year 1999. I've been doing this a few years, almost 20 now. How time flies when you're having a great time trading millions of dollars worth of stuff. Anyway, this guy ran from 42 and change up to 44.6, so it's got over a 2-point run. What I like about it is how clean and well managed the open range breakout is, and then the subsequent breakout that ran all the way into early afternoon. You want charts for day or swing trading that have a nice, clean, tight, sustainable pattern. Your biggest challenge as a trader, and you may disagree with me on this or agree with me, but I have found that finding charts that are consistent after you put on the trade is kind of the holy grail and the difficult thing to get at. So I always look at what the traders did in the instrument right before I trade it to see if they're likely to do a repeat. And as pattern day traders and pattern swing traders, we capitalize on repetitive patterns. So we're looking for the same kind of pattern or portion of this, say on a Monday or Tuesday. So DHI, what a chart. Not good for swing trading. That's kind of choppy, grinding on the way up, but it is good for intraday. You'll often find, by the way, one of the skills that you really want to work on as an active trader is kind of have the Great Wall of China here, which is a great movie called The Great Wall. But anyway, I digress. Decision making as to whether a chart is better as a day or a swing trade. And each of those charts have different characteristics that qualify them uniquely for consideration. So consistency of trend, where you've got an acceleration ramp, steady uptrend, little hop, skip, and a jump with a gap and a sharp angle breakout. that makes for a good play. Now we don't want to buy right over new highs. We want to give it a little bit of breathing room and then get in if it's able to continue on up. So those are the kind of thoughts that we want to take into the markets as traders. And just a reminder too, before we move on, a quick message here for all of you who are considering swing scans. Something I just added last week, it's been on the to-do list, is I put in a preview of the members area. So you can see, even before you do the $7 trial, you can see exactly how high quality this is, right? This is the Swing Scans members area. You get the download of the current week's webinar, which is every day, coming up at about 15-20 minutes for our current members. And the downloadable video of both this week and the previous week is there in the members area. But the main thing that I'm proud of, and look at the performance, this is last week's alerts. All my members got this last week. These are the tickers that they got, and these are the price triggers that they used. And you saw how you could audit the performance yourself and see how much money one could have potentially made had one actually traded these. Now I say these are for paper trading use only, and it's certainly up to you whether or not you want to listen to that, but see how well these worked out. This is what our members get every single week. Every week like clockwork. I update these Friday after the closing bell. So usually by 6 o'clock East Coast time, I get these updated for everybody. And it's every single week like clockwork. You get my top 10 picks plus a live webinar, and you can ask questions and all that kind of stuff, which oftentimes traders will. And also I've got directions here. By the way, that's a good tip sheet you can look at. Just, whether or not you join, you can take a look at that as some guidance for ideas for how to set stops and handle gaps and all the rest of it when you're swing trading. That's the approach I like using. So anyway, and how to paper trade and use alerts, there's coaching videos and resources and all kinds of stuff. So anyway, that's available at the previews free at swingscans.com/preview. So before you wisely decide to join Swing Scans, there's that. Let's move on. Next up to bat, I want to take a quick look at our Forex charts. For all of you who are currency traders, do remember to try forexvideos.com. That's my site one of several Forex sites I run with my colleague Peter Bain, who's one of the top respected Forex currency trading experts in the world. And he's a great guy. He's really smart. And anyway, our service is at forexvideos.com, forexvideos.com. This upcoming week, the Euro CAD is okay. I don't see any spectacular currency charts currently. They're all pulling back or down, at least to the group that I follow. So I don't see any new high breakouts in currency markets. It's been like that the last couple of weeks. As the stock market rallies, that's drawn a lot of the money out of the currency markets. And money always has to find a home, and it looks for volatility. So we've had a bit less volatility, but of all the currency charts, the Forex charts, the Euro CAD is the best pre-existing uptrend to wait for a breakout if it's able to take out new highs. So that's one if you're a currency trader. This is much more a scalper's market or a day trading currency market, FX, and a swing traders. This is not the time to swing trade Forex. This is the time to day trade or scalp Forex if you're a Forex trader. Just a word to the wise. What else do we got? We got so many good charts here to work with. If we do a quick look at some of our sectors, this is our page here. ETFs. If we look at our sectors and see who's hot, insurance is starting to run, pharmaceuticals, biotechs. At least that was yesterday's price action. They're starting to move up, but none of them are beating the market. So I'm not really excited about specific sectors. The finance sector is a better chart than the S&P chart, so it's slightly better. But from a directional volatility standpoint, I don't see any really big standout sectors. I know from running the live room, retailers have been hot lately. Some of the stocks like Kohl's, KSS, and others have been really taking out new highs lately. In our banking sector, so finance and banking often leads the market higher, by the way. Small caps in the Russell and finance are the two lead indicators for the rest of the markets. Oftentimes you'll see lead breakouts in finance and sector leading the entire stock market higher, and also strength in the Russell and the small caps. So for what it's worth, I don't see any big strength in the oil or gold sector. Oil's been selling off. If you look at USO, UCO, those have been pulling back off their previous uptrending highs. Starting toward late May, oil dropped sharply, trying to find support, but I'm not going to re-enter oil positions unless we climb over the 50 SMA. So for UCO, that would be over 30, right? And you know I usually use 50 cents or so as a false breakout filter. So 30.5 would be a likely good trigger point. I'll be using, at least in my own capital accounts, for re-entry in the oil sector. USO, same story. Gold's doing nothing, so gold's not worth trading. That's Nugget. Here's Newmont. Here's Barrick. They're no-shows. They're non-story charts. We want charts that actually have spectacular directional volatility to work with. Let's see. We've got just a few minutes left. I wanted to thank all of you for being here. Sandy's asking, what's my favorite trading platform? I use Interactive Brokers. I am a long-time IB user. I've got accounts with both Fidelity and Ameritrade as well. But Interactive Brokers is the most professional trading platform I've ever used in my life. It's got more than enough features and instant fills. I use eSignal for my charting platform, but I've also used TradeStation, Metastock, and NinjaTrader, all of which are really, really good too. So I'm glad you asked that question too. It brings up a good point. Don't use cheap charts. Don't use like your broker's charts, because you're at a distinct disadvantage to those of us who use professional charts. It's like, don't bring a butter knife to a gunfight. If you're trading against professionals, which you are, you don't have to buy all the bells and whistles and the most expensive versions of the software, but do try out different premium charting software packages. Always be testing new ideas. Which charting platform, which type of trades make sense for you. Are you a breakout trader? Are you a pivot trader? Do you trade good price stocks with big, huge 15-point trading ranges? Or do you like these cheapies with 2 and 3 point ranges? What makes sense for you isn't the same as the trader next to you. I always am amazed by the diversity of the trading community when I go speak at the money show events. Lots of traders they're day traders, there's swing traders, there's options traders, there's Forex and E-mini traders, and different time frames as well. So do be a fan of testing things out. Don't put all your eggs in one basket and get frustrated and give up too soon. A lot of traders give up too early, or they slow down in their trading because they're not aggressively testing. You should be testing in a demo account some of the things that work out for you. Hey Mike. Question from John, what do I recommend reading? Darvis. I like the book, How I Made $2 Million in the Stock Market by Nicholas Darvis. He basically talks about box trading range approach. It's a famous classic book from back in the 50s or 60s about using box ranges. I use that approach for scaling or position sizing. So this guy is up here. If I were to buy somewhere in the current trading range, the next entry would be somewhere over 10. Or for a stock like Momo, if I bought, say, 53 and change, the next entry would be over 55. So I do like the idea of box ranges. And I like to use price projections. So this is the major price action in this guy. How many points does Momo have in a box trading range? Who can tell me? What's the current? So just to add to the trader's question about Darvis, which is a good resource, the book, 10 points. We got a 10-point range. So if I buy north of 53, the best case projected exit target would be near 63. Odds are you and I won't get that. Maybe it just runs to 60 or 50, 56, 58 if it does keep going. But you got to start somewhere. And the best thing to do as a trader is to look at the box range. Always divide your charts into box trading ranges, because that gives you a really keen insight in terms of the specific volatility that that particular instrument has on a short-term time frame. So if it's got a 10-point range, just like average true ranges, this guy's best case ATR is right around 3 points, 49 to 52 and change. Best case average true range is around 3 points. Average might be closer to 2 points. Recent trading range, 3 points. So don't expect 5 or 6 points out of it, is what I'm saying, in a single day. Always characterize volatility as a trader. As a former corporate statistician at the Ford Motor Company, we had a lot of expertise in numbers and quantitative analysis. And one of the things you want to look at as a trader intelligently, a thinking trader, we're always looking at volatility and how to make money and how to not get screwed by the charts when things go against us. And what you're looking at is things like trading ranges. How many points did it run? Or intraday, like that DHI chart. How many points did it run, roughly? 42.30 to 42.60 or 44.60. It's got a little over 2 points of range. So if I buy 44.80, the best case would be maybe 46.80 for a day trade. But I like to get 40 to 80 cents, maybe $1 on a day trade. That's me. I like to short attention span. I like to trade quick, fast, hard, and intelligently. But anyway, the point is the previous day's trading range, the PDTR, is 2 points here. That's valuable information moving forward. Maybe we get a mean reversion back down to the 43 and change, and then it pivots. Then there's a trade opportunity in that window. So use some intelligent thought process for the kind of charts that make sense and make it all work out. Anyways, I've got to run. I've got swing scans coming up momentarily. I wanted to thank all of you for being here. I will see all of my Swing Scans members coming up in a few minutes, where we'll look at even better charts and answer questions and the rest of it. Thanks to all of you for being here. Appreciate it. You're right, Dave, about the Momo extension. You're welcome, John. Sure thing, man. I think that's about it. Ruth, I haven't used that brokerage. I think that's about it. So short and sweet. What do you guys think? I like to give you my thoughts on not only a few great charts to look at different price points and different trading styles, but also the broad S&P profile. Last week I said long 27.52. That's starting to work out, and I like the fact that the market is starting to finally break out of its congestion box. It's kind of like it's awakening out of a deep slumber, and it's finally starting to get awake with some caffeine. So we'll see if it's able to continue the madness on up next week as well. Well, take care and best wishes for success. I've got to run. Swing Scans members, I'll see you guys. The party continues in just a few minutes, so I will see you all in Swing Scans coming right up. And for all of the rest of you who are not Swing Scans members, do give it a shot. I guarantee, the trial is money back, $7 even. It's really cheap. I guarantee. Alerts so good they're guaranteed. And the main thing I'm proud of, though, is the training and the intelligence of the questions that you folks ask, and the community and the teamwork we've built. So hopefully I'll see you in Swing Scans, and I will see you guys, all of you, next Saturday. So until next time, trade with passion, or at least intelligence. Trade with itty-bitty stops. Play the field. Trade wide, not deep, as I say. And let's go get them. Take care and best wishes for success in your trades, and let's make it a good one. Bye for now.